There is a skill that separates traders who survive from traders who thrive, and it has nothing to do with charts, indicators, or market analysis. It is the ability to feel everything and act on nothing. The skill that makes traders emotionally untouchable is not about eliminating emotion. It is about dismantling the power emotion has over your decisions. Most traders spend their entire careers chasing this skill without ever understanding what it actually is. They confuse emotional control with emotional suppression. They think being disciplined means forcing themselves to act correctly in moments of fear or greed. But that approach is exhausting, fragile, and destined to fail. The truth is far simpler and far more powerful. The emotionally untouchable trader does not fight their emotions. They remove the battlefield entirely. Let me tell you about a trader I once knew. We will call him James. James had been trading for 3 years. He had a solid strategy, a clear risk management plan, and all the technical knowledge he needed. On paper, he should have been profitable. But he was not. Every month, he would make steady gains for 2 weeks, then lose it all in a single day. The pattern was so consistent it became predictable. He would blow up his account, not because his strategy failed, but because he could not sit still when fear whispered in his ear. One losing trade would trigger another. One moment of doubt would lead to revenge trading. One flash of greed would make him double his position size. James was not lacking information. He was lacking emotional immunity. And until he understood what that truly meant, no amount of education could save him. Emotional immunity is not about being cold or robotic. It is not about detaching from outcomes or pretending losses do not hurt. It is about designing your trading in such a way that emotions have nowhere to attach. Most traders believe discipline is a battle you win in the moment. When fear is screaming at you to close the trade early, when greed is begging you to take more risk, when boredom is pushing you to trade when there is no setup. They think willpower is the answer. But willpower is a resource that runs out. The emotionally untouchable trader does not rely on willpower. They rely on structure. They make decisions before emotions ever arrive. They build a system where the right action is the default action, and the wrong action requires effort. That is the inversion most traders never understand. Think about the last time you deviated from your plan. Maybe you closed a trade too early because you were afraid of losing your profit. Maybe you held a losing trade too long because you refused to accept the loss. Maybe you took a trade that did not meet your criteria because you were bored or frustrated. In every one of those moments, emotion made the decision for you, not because you are weak, not because you lack discipline, but because the decision was still open. When a decision is open, emotion fills the gap. The mind hates uncertainty. It will do anything to resolve it, even if that means sabotaging your long-term success for short-term relief. That is why traders panic. That is why they overtrade. That is why they break their own rules. Uncertainty creates emotional vulnerability. The emotionally untouchable trader eliminates uncertainty before the trade exists. Here is what that looks like in practice. Before entering a trade, every variable is decided. Entry price, stop loss, take profit, position size, maximum acceptable loss. There is no room for interpretation. No space for negotiation. The plan is written, reviewed, and locked in. Once the trade is live, there is nothing left to decide. The trader becomes an executor, not a decision maker. This is the most critical distinction. Decision-making invites emotion. Execution does not. When you know exactly what you will do regardless of what the market does, fear loses its leverage. Greed has no opportunity. Doubt cannot interfere. The trade runs its course, and you follow the plan. This is not rigidity. This is freedom. Because the mental energy most traders waste fighting their emotions is redirected toward observation, learning, and improvement. But most traders resist this level of structure. They think it will make trading mechanical or boring. They want the flexibility to adjust in the moment, to feel like they are actively involved in the outcome. This is ego talking. Ego wants to feel important. It wants to believe that your real-time decisions matter more than your preparation. But the market does not care about your ego. It rewards consistency, not cleverness. The traders who make money year after year are not the ones making brilliant split-second decisions. They are the ones who follow the same boring process over and over again without deviation. That process protects them from themselves. It removes the emotional drama that destroys most accounts. Let me give you an example. Imagine two traders take the exact same trade. Same entry, same stop loss, same strategy. The market moves against them immediately. Trader 1 starts to panic. He watches the red number grow. His heart rate increases. His mind races. What if this loss wipes out yesterday's gain? What if the trade keeps moving against me? Should I close now and take a smaller loss? He hesitates, debates, and eventually closes the trade early. 5 minutes later, the price reverses and hits his original take profit. He feels sick. Trader 2 experiences the same initial price movement. He also feels the fear. His stomach tightens, but he does not act on it. Why? Because the decision was already made. His stop loss is set. His risk is defined. There is nothing to negotiate. He closes the chart and walks away. The trade either hits his stop or his target. He does not need to watch. When he checks later, the trade hit his take profit exactly as planned. Same setup. Same market conditions. Different outcomes. The difference was not strategy. It was emotional structure. This is what emotional untouchability looks like. It is not the absence of fear. It is the presence of a framework that makes fear irrelevant. Fear exists to protect you from danger. But in trading, fear is often irrational. It triggers when you are risking 1% of your account, as if your survival depends on this single trade. The emotionally untouchable trader trains their mind to recognize this. They use risk management not just as a financial tool, but as a psychological one. When you know with absolute certainty that a loss will not hurt you, fear becomes background noise. It might still be there, but it does not dictate behavior. This is the shift that changes everything. You stop reacting to emotions and start observing them. One of the most dangerous misconceptions in trading is the belief that confidence comes from winning. It does not. Confidence comes from predictability of behavior. When you know you will follow your plan no matter what happens, you trust yourself. That trust creates calm. That calm allows you to execute clearly. Most traders have it backwards. They think they need to win first to feel confident. So they chase wins, take bigger risks, and break their rules trying to manufacture confidence. But every time they deviate, they erode self-trust. The cycle repeats. Losses pile up. Confidence crumbles. They blame the market, their strategy, their luck. But the real issue is they never built a foundation of behavioral consistency. The emotionally untouchable trader builds confidence differently. They prove to themselves, trade after trade, that they can be trusted to act correctly regardless of outcome. That proof is worth more than any single winning trade. Another layer of emotional untouchability is identity. Many traders unknowingly tie their self-worth to their results. A winning day feels like validation. A losing day feels like failure. This makes trading emotionally torturous because every trade becomes a referendum on your value as a person. The untouchable trader separates identity from outcome. They do not see themselves as a winner or loser based on this week's profit and loss. They see themselves as a professional executing a process. Their pride comes from discipline, not dollars. This is a subtle but massive shift. When you stop measuring yourself by results and start measuring yourself by adherence to process, emotional swings flatten. A loss is no longer an attack on your identity. It is simply data. A win is not proof you are special. It is confirmation the process works. This detachment is not cold. It is mature. It allows you to trade with clarity instead of desperation. Let me take you deeper into why most traders struggle with this. The human brain is wired for immediate feedback. It craves resolution. In trading, that wiring becomes a liability. The market does not provide clean, immediate feedback. A trade can be technically perfect and still lose. A trade can be reckless and still win. The outcome does not always reflect the quality of the decision. Most traders cannot handle this. They need to feel like they are doing something right or wrong in real time. So they interpret every price tick as feedback. Red candles feel like punishment. Green candles feel like reward. This creates an emotional roller coaster that has nothing to do with actual performance. The emotionally untouchable trader breaks this pattern by redefining feedback. They do not judge trades based on profit or loss. They judge trades based on whether they followed the plan. Did I execute correctly? Did I respect my risk? Did I wait for my setup? If yes, the trade was a success, regardless of the financial outcome. This reframe is everything. It turns trading from an emotional lottery into a skill-building exercise. Now let me address one of the most overlooked aspects of emotional immunity: pre-acceptance of loss. If you have not truly accepted the potential loss before entering a trade, you will fight it emotionally when it happens. Acceptance after the fact is too late. The emotionally untouchable trader mentally pays for the loss before clicking buy or sell. They visualize the money leaving their account. They feel the discomfort. They make peace with it. This does not mean expecting to lose. It means being at peace with the possibility. When loss arrives, it is familiar, not shocking. Shock is what triggers emotional spirals. Panic, revenge trading, overtrading. All of these reactions stem from unprocessed shock. The trader who pre-accepts loss removes the shock. The loss still hurts, but it does not derail behavior. This is a trainable skill. Before every trade pause, close your eyes. Imagine the stop loss hitting. Feel it. Accept it. Only then, enter. This simple mental ritual builds immunity over time. Boredom is another emotion most traders underestimate. It feels harmless compared to fear or greed. But boredom is one of the most destructive forces in trading. It pushes traders into random action. They start taking setups that do not meet their criteria. They overtrade. They create problems where none existed. Why? Because sitting still feels unproductive. The mind interprets inaction as wasted time. The emotionally untouchable trader understands that doing nothing is often the highest value action. Waiting for the right setup is not boring. It is strategic. But this requires a mindset shift. You have to see patience as an active skill, not passive laziness. You have to train yourself to sit in discomfort without needing relief. This is hard. Our culture glorifies constant action. But trading rewards the opposite. The ability to wait without resentment is rare, and it is one of the clearest signs of emotional maturity. Let me tell you what happened to James, the trader I mentioned earlier. After months of repeating the same mistakes, he finally admitted the problem was not his strategy. It was his inability to sit with discomfort. Every time a trade moved against him, even slightly, he felt an overwhelming urge to do something. Close it, add to it, check the news, anything to relieve the tension. One day, he made a rule. Once a trade is live, he would not touch it until his alert went off. No exceptions. The first few trades were agony. He felt the urge to intervene constantly. But he forced himself to walk away. Over time, something shifted. The urge weakened. His nervous system learned that discomfort does not require action. His results improved immediately. Not because his strategy changed, but because he stopped interfering with it. That is the power of emotional structure. It protects you from your own impulses. Time also plays a critical role in emotional untouchability. Emotional reactivity is highest when traders stare at charts without purpose. Every tick feels significant. Every candle feels like a message. This creates artificial urgency. The emotionally untouchable trader knows when to engage and when to disengage. They are not glued to the screen. They trust their alerts. They trust their levels. They trust their preparation. This reduces emotional exposure. Less screen time means less emotional turbulence. It also prevents the trap of overanalyzing. When you watch the market too closely, you start seeing patterns that do not exist. You start second-guessing your plan. You start creating problems. The solution is simple but counterintuitive. Trade less. Watch less. Trust more. This is not laziness. It is discipline. It is the recognition that your plan is either sound or it is not. Watching it unfold in real time does not improve it. It only increases the chance you will sabotage it. Another critical element is the concept of emotional residue. Every trade leaves an emotional imprint. A big win can create overconfidence. A bad loss can create fear. If you do not clear this residue between trades, it contaminates your next decision. The emotionally untouchable trader has a ritual for clearing emotional residue. It might be a few deep breaths. a walk, a review of the trade journal. The specific method does not matter. What matters is the intentional reset. You do not carry the last trade into the next one. Each trade is independent. This is easier said than done. Our brains naturally hold onto emotional experiences. But with practice, you can train yourself to recognize when residue is present and actively release it. This prevents the emotional spiral where one bad trade leads to 5 more. Let me share a framework that helps. After every trade, ask yourself 3 questions. Did I follow my plan? What did I feel during the trade? What would I do differently next time? Notice these questions focus on process and awareness, not profit or loss. This trains your brain to extract learning instead of emotional judgment. Over time, this practice builds a feedback loop that rewards discipline, not outcomes. The more you reinforce this loop, the stronger your emotional immunity becomes. Eventually, following the plan feels natural. Deviating feels uncomfortable. You have rewired your default response. The role of visualization is also underestimated. The emotionally untouchable trader does not just plan their trades. They visualize them. Before the market opens, they sit quietly and imagine possible scenarios. The price hitting their stop. The price reversing against them. The trade sitting flat for hours. They visualize their emotional response and then visualize themselves executing the plan calmly. This mental rehearsal prepares the brain for reality. When the visualized scenario occurs, it feels familiar. The brain has already practiced the correct response. This reduces the intensity of the emotional reaction. Athletes use this technique. Surgeons use this technique. Traders should too. It is one of the most effective tools for building emotional resilience. Now let me address the elephant in the room. Many traders believe they need to feel nothing to trade well. This is a myth. Feeling nothing is not the goal. The goal is to act correctly despite what you feel. Emotions are information. Fear tells you there is perceived risk. Greed tells you there is perceived opportunity. Frustration tells you there is unmet expectation. The emotionally untouchable trader does not ignore these signals. They acknowledge them, label them, and then act according to plan, not according to emotion. This is emotional intelligence, not emotional suppression. Suppression creates pressure. Eventually, that pressure explodes. Acknowledgement creates space. It allows you to observe emotion without being controlled by it. This is the difference between reacting and responding. Reacting is automatic. Responding is intentional. The untouchable trader trains themselves to respond. Here is a practical exercise. During your next trade, when you feel a strong emotion, pause. Say out loud or in your head what you are feeling. I am feeling fear. I am feeling greed. I am feeling impatience. Then ask yourself, what does my plan say I should do right now? Follow the plan, not the feeling. Do this consistently, and over time, the gap between feeling and action widens. The emotion still exists, but it no longer triggers impulsive behavior. This is the essence of emotional untouchability. Not the absence of emotion, but the presence of choice. Let me tell you what ultimately transformed James. He started a practice he called the discipline journal. Every day, he wrote down not his trades, but his adherence to his rules. Did I wait for my setup? Did I respect my stop loss? Did I size my position correctly? Did I resist the urge to overtrade? He gave himself a score based purely on discipline, not profit. Some of his most disciplined days were losing days. Some of his least disciplined days were winning days. But over time, he noticed a pattern. The more disciplined he was, the more consistent his results became. The wins and losses balanced out, but the discipline compounded. His confidence grew not from profits, but from proof that he could trust himself. That trust changed everything. He stopped second-guessing. He stopped revenge trading. He stopped overtrading. He became emotionally untouchable, not because he stopped feeling, but because he stopped obeying his feelings. This is the skill that makes traders emotionally untouchable. It is not about controlling the market. It is about controlling your response to the market. It is not about eliminating fear or greed. It is about building a system where fear and greed cannot hijack your decisions. It is not about being perfect. It is about being consistent. And consistency, over time, creates results that look like magic but are actually the result of disciplined, intentional, emotionally intelligent trading. Most traders will never develop this skill because it requires brutal honesty, relentless self-awareness, and the willingness to feel uncomfortable without acting on it. But for those who do, trading transforms from a source of stress into a source of clarity. The market stops feeling like an opponent. It becomes a neutral environment where you execute a process. Your emotions stop feeling like obstacles. They become signals you observe but do not obey. You become untouchable not because nothing affects you, but because nothing controls you. And that is the ultimate edge in trading.